Here is the crude. I mean, again, if you've been following me, pretty typical crude pop news. It wasn't. I think the crude boys created got together and created this whole deal just because they were tired of watching silver and gold have all the fun. So crude decided, frick it, we'll start something and we'll get her going. I know it's a little conspiratorial, but it all, again, if you've been following me over the decades, you know that there's always a spring break rally, right? When kids go off to spring break, which is heavy travel time, can't get a hotel. Terrible if you're not a kid to be out and about. But always a spring break rally, no different this time. It was caused by some man-made effect, government intervention, and then these energy boys got way too much control, these other countries in particular. So anyway, you have that up. Now you've stayed up here long enough. It takes several months to get some of these abandoned wells kicked on and get them registered, get them back up to speed. Costs money, but at $90 to 100, there you can make money then on these wells that don't produce very well. Well, and then all of a sudden you drop back. It's just typical, right? 60s to 50s, you're break even to losing again. So, but once they get them kicked on, I think they'll keep them on at least for a few months till the end of the year probably. And if it's a loss, they'll shut them back off, right? If the crude oil doesn't. Anyway, point being, they can change the demand or the supply pretty quickly on those abandoned wells. Um, so I know I mentioned that before, but you can see we just keep tailing off. Typical, right? I think you're in the greed, hope, fear. We're just beginning the fear stage. The greed was up in here, and this plateau was kind of the hope, and now we're kind of into the fear stage. So, I mean, I could see crude going all the way back down, making new lows from this beginning. It's typical, right? 80%, 85. Sugar, or excuse me, silver hasn't quite done that much, but it's broke back quite a bit. It's just the nature of every bull market, unless you get reading the news and get too frothy bullish. Here is the nat gas. Again, pretty simple chart. Just a bear, right? You're almost popped it out, almost got stopped out, and we got in here, so we got a little profit. Again, wrong time of the year to get too antsy. Now, as we get into September, that's when my feelers start going up to, again, everybody's starting to look at the weather and the longer term forecast. It's going to be a bad winter, right? That's when you can kind of get some people hedging that, yeah, better get some stuff locked in. The mom and pop shops out east, they have a tough time because they got to buy cash and they get screwed every time. They can't really hedge with the crap because they don't have enough. All right, let's go to even the S&P. This kind of coiling pattern is not a bearish pattern. We had, one here and it ended up breaking and popping out lows, which makes sense. It started this whole maneuver. I think what I call the Gann effect. The Trump effect is pretty obvious, right? He was going to change it up, muck up the whole thing. He said he was back 20 years ago, and he's doing what he said. So shouldn't be a surprise. But I think the positive effects are pretty obvious on the stock market in particular, and the metals and the energies, and so. Yeah, and the war thing, he said he was going to do. He wanted to do that back, any interview you listen to. So this isn't new news. People are making it like it's a big deal, like it's big deal newsworthy wise, but it's not. It's old news, really. It's just following through what he says he's going to do. Here's the euro, kind of a chippity choppity. Down we go, which again tells you the dollar's stronger, right? We are down. This will be 30, will be right here. Let me just draw in a simple little trend line squaring out the range. And you can see it's kind of key, right? I can see it without even drawing it in. Here's the 180 degrees from that high, close to the solar, right? So I like all this potential, either a bottom or maybe a counter pop. Next week our stops will remain the same. So we'll, more than likely if there's something that's going on, we'll get popped out. But again, no guessing there. Stay with the trend for sure. Here's the gold, made another new low. Just a typical post-bull market. I know people don't believe it, but that's what happens every time. They're reading the news, hear an AI little guy, the Asian guy, talk about all the bullishness in the silver. I immediately started selling out. When I see that, I go, back in my day, if the runners are buying, if runners on the Chicago Board of Trade, if the runners are buying, you got to get out. The highs are in. If the taxi cab driver tells you to buy stocks and the highs are in, right? That kind of theory. Well, when you hear the little Asian guy talking about how bullish silver is and gold, then be careful, because these guys are trying to talk such a small amount. I mean, the silver contract that we just flipped to, and that's a 5,000 ounce contract. That's 5,000 of those little bars you're buying at the pawn shop. So they're not talking the remote equally the same at all. I mean, I got guys from the 70s that could deliver to a pawn shop a 5,000 ounce bar they took delivery of that cost them 15 grand is all. So, what are they going to do? Plop it down and say, I want cash? They go, So, yeah, but for those who are bullish, it did make a trap. We talked about that. The stops are more reasonable. Um, yeah, it's just we're again, greed. This is the greed. This is the hope. We just beginning the fear stage, so be a little careful yet. Again, I'm not trying to preach anything here, right? Just logic. Yeah. So we are again 180 degrees is similar to the euro, which is interesting, and the squaring of that range kind of comes out into here. So you're talking July 29th, so the end of this month to the middle of August. We'll just kind of round there. It's kind of where I would be less like, and we'll go through some of that on the daily. Here's the cattle, just a chippity choppity up and below. The solar eclipse right here is doing its thing, right? It's keeping everybody on the fence. This is the April contract. This is the D's contract. I just got to assume the highs are probably in. Cattle have been making new highs every 6 months or so, so wouldn't be uncommon maybe to see a maybe a little bit quieter market in here. Here's the Bitcoin. Made a new low. I like that trap. Now we're into the August contract. Now the futures. The stop is right here, which is a good stop. I have no problems with that. Solar eclipse close right here is pretty key. Might go back up to it, get me stopped in and out of my short, which would be a little profit zone, and then be long, but then might run into some trouble right away. Again, the close would be key. If you close lower Tuesday, then 61,532. If we close down here, I will be a little heavy into the end of the week, kind of my theory. All right, now let's pull up the bar chart stuff, and we'll go through the daily charts. Hang with me.
Hope, fear, greed, hope, fear, hope, fear, hope, fear, hope, fear.
Here's the crude again. Just margins have probably come down a little bit. You be taking out the money bar, I call it. Well, actually, 2 bars I would have used. But this was kind of the high-low, bam, bam, quick. That caused all the action, and we started drizzling it out in small itty-bitty ranges. Again, I think it was a created bull because the big boys in the energies that have all the money, by the way, they control the world, can control wars and everything else. I think this makes sense that they created this pop because they wanted some action to hedge on, and they're hedging. They probably hedged like a son of a buck for. Again, you can trade crude 10 years out in the future. You can trade strips, right? Which is you can do like one every. If you're a small guy, you can do one a month average for 12 months. That's 12 contract. That's a strip. Now you can do 3, 10, 20, 100,000. You can do strips that way and average out your. Anyway, there's ways to hedge, and they know how to use them. They don't worry about Kansas cash crude price. Here is the nat gas. Kind of again, this is a spot chart. You look at this. Now let's switch to the D's. And it looks a little more putrid, a little more heavy. I think we're going to keep pounding out lows. The key, of course, is the spot chart. Now, what happens is on futures, it doesn't happen that way on stock. You get these lows. You can see we had a low here, and of course, we had a low here, and we took it out, right, because of the rollover effect of all the contract. So we get up here, I think we'll take it out. So I think that's just how these markets will work. I think you just keep making the same with probably some others, but I think you just keep taking out lows over and over and over again until we get prepped for the weather. Again, we're on the nearby yet. Again, we had this run 20%. It is what it is. It's this if this is leg 1, this is leg 2. We're on leg 3 right now. This coil, right, this hesitational pattern, which is not bearish, right, and so proven, that's a bullish uptrend pattern. This was a weird one, right? That was a forced sell. Again, that's what's happening in a lot of the NASDAQ stuff in particular with Elon's SpaceX coming on board. They changed the rules. They got on quick, faster than broke the rule. But they changed it. They didn't break the rules. They changed the rules. And what happens is all these companies, funds and mutual funds, whatnot, it's a weighted average, right? So they have to sell all their other NASDAQ stocks to buy SpaceX. They have to put it in there. They have to. it's automatic, right? So they had to buy all these Nasdaq, get rid of all the Apple and Nvidia and all the ones that are proven to be profitable. SpaceX isn't proven yet; it's just beginning. Um, and the problem with SpaceX then is 90% of it isn't going to the SpaceX program itself; it's going to their AI platform. So it's a little tricky, and he's the only one that controls it. He made himself the kingpin. Not a big fan of any of that. Uh, but we also now what happens since they changed that rule? Now the other AI platforms that are Anthropic and some other ones that are going to be going public now also don't have to wait, right? They change the rules, so immediately we're going to have 3 or 4 big companies coming online that force people to sell. Now that's bearish near term, but bullish longer term. Anytime you force something down because of rules or tendencies, it goes, it does break or a pause, right? And then eventually gets bullish, more bullish down the road. Now, of course, if Anthropic, when they come on, and SpaceX, if they go up big, double from here, that puts even more pressure on, right? They have to get out of more shares. It's a balancing act that doesn't make a lot of sense to a lot of people, but it's just how it is. If you're going to have all the NASDAQ stocks, you have to do it that way. That's just the rules. Okay, so anyway, nice coiling pattern. Here we go. Uh, you know, again, coming from the commodity world, nothing pisses me off more than a protected market, and the stock market's protected, right? I mean, you can be long, or you can be in Chicago Board of Trade wheat and have a 10-year bear pattern. Well, I can't imagine having a 10-year bear pattern nowadays in any stock, right? Because all these people cost average down, which coming from the commodity world is a sin. You get your ass actually pummeled. You got to roll. You got, every time there's spreads. You got to worry. You got deliveries to worry about in stocks. You don't worry that. So they just it always you buy the breaks and you hang on and you make money. Hopefully, we never have that in the stock market, a 10-year bear, because it would actually destroy people's models. The AI platforms would get busted to sin. I don't know. But if we're going to have even a big break, the tendency, if we're going to have a huge break at some point, we got to have a capitulation. This doesn't look like a capitulation to me. We got to have that spike where everybody's in, even the taxi cab drivers. Here is the Euro FX. Again, a nice little break. Kind of, again, I trade the euro because the dollar sucks. There's no volume in the U.S. dollar futures. I'd rather trade the dollar, so I do this. It's the opposite, right? So this tells you the dollar's up near its highs. Here is the gold. Again, just a puny, putrid puke, but it's high margins. Um, and near that solar eclipse, by the way. Let me go back. This is the solar eclipse right here, the previous one. I deleted the other one, and the other one. Oh, it's right up here. So this is a pretty good chopping range, so it makes sense that we could be in that for a while. Here is the silver. Again, another new low. Just again, this is the greed, this was the hope, and now we're just beginning the fear stage. There's probably an AI mathematical platform that tells you how long an average fear stage is. I think we just begun. I imagine it takes a while. Now the margins are the trick, right? 66,000. This rally, when it got back to here, was about 44,000. I believe we're about 30,000. I'm assuming. Don't know exact, but the problem with margins going back down is a two-way street. Hedgers, people wanting to sell, can't afford to sell either because of high margins. So, because their cash silver is not linked to their futures account, so they get a spread offset, right? So now some stock portfolios and mining stock, they might have a spread off risk associated with being short silver futures, but not in the cash, as far as I know. So, but the margins go down to two-way street. Buyers can afford to buy it again, but sellers then also can afford to sell it. So you got to be a little careful there as margins drop down. This is the cattle, again, the futures, kind of the high side chop. If you draw your Andrews pitchfork in here, you're right in here somewhere. So it's looking like it's maybe a potential top for a while and set up for end of the year low. Here's Bitcoin, again, kind of 50%, 52 down to this low. Made another new low, again, just trickling. This pop Friday was good. Or excuse me, Thursday. Today's Friday. So this little pop we had here is kind of good. Now again, we have a 4-day, or Friday is off, Saturday, Sunday, Monday. So, and the moon comes in on Tuesday, the next zone. So you got to be a little careful of any of these markets. It could be a gapping, a gap potential there. All right, that's all I have. I'm going to sign off here on the 4th of July weekend. Hope everybody has a great, and be cautious out there. It's weird zones and time frame. We just came out of the full moon, so be careful out there and have a great 4th of July, and we'll visit with you. Probably won't be next week unless some stuff really pops. It's kind of slow in the commodity world. I'll probably wait a couple weeks to do the next video, unless something really fires up. We only had one trade since what, 10 days since I did the last video. So again, it's pretty slow, but that's good. That's the zones that you start doing your homework and figure out where you're buying and selling. And again, these videos will be split up. I'll have corn to the juice, crude to the Bitcoin. I'll kind of cut them and splice some stuff in. And I'll have this comprehensive one we just did as well. So, all right, salute you.